And we're live. Welcome back to another episode of How To with Ziad. This week we have a really exciting topic that we're talking about. We are going to be discussing stock splits. This has been kind of the hot topic of this week. So let's invite Ziad on here and let's start talking about what has happened recently. And also, I just want to emphasize that really everything that we're saying should not be taken as personal advice. If you have questions about your personal situation, please go ask your financial advisor because we will be talking about certain companies. Hi, Ziad.
Hi, Mia. How's it going?
Going well. Hey, I think this is our 8th episode of How To.
I
So
believe
it's like our
so.
2-month anniversary of How To with Ziad.
I can't believe it's already been 2 months. It's
So
been a
happy
blast doing these.
anniversary.
Yeah, right back at you.
I'm really excited that we've continued this series. And, how are you doing?
I'm doing great. It's been a great week. I'm actually moving this weekend, so looking forward to that.
That's
But
exciting
yeah,
stuff.
yeah,
It's supposed to be hot this weekend. You're moving in the hot weather.
yeah. I know. I'm a little nervous, but you got to do what you got to do. So,
Exactly. Well,
yeah.
let's go ahead. Let's jump into things. Why don't you give us a brief overview of what we're going to be talking about today?
Yeah, of course. So this week, if you haven't been paying attention to the news recently, both Apple and Tesla announced stock splits that actually, as of earlier this week, were executed. And so, being that Apple and Tesla are two of the biggest positions that we own as a firm, we want to just give a little bit of insight on what stock splits are, why companies do them, how does this affect an investor or the investment landscape, and answer any questions that you guys have on it.
Yes, exactly. So please, if you have any questions while we're talking, put them in the comments section and we'll try to get to them right away. So as you said, Tesla and Apple are two of our core holdings and they've just undergone forward stock splits. So in
Mm-hmm.
short, a forward stock split is when a company increases the number of shares outstanding by
Mm-hmm.
issuing new shares to existing shareholders in proportion to their current holdings.
Yeah.
So why don't you elaborate on what is the point of a stock split or a
Yeah.
forward stock split more specifically?
Yeah, and before I even do that, I wanna make sure that people know that when a stock split does happen, the actual value of the company is not changing. It's just kind of the math on the back end that is changing a little bit. If you are getting more shares, your share price is going to decrease in relation to that. But once you do the math, the actual value of the company will stay the same. Most of the times when a company does a forward stock split, it's for two reasons. And this is just to give a little background. What happens is a lot of people on the institutional side, when they make trades, they like to trade in blocks. And so they trade in blocks of 100 shares at a time. And when share prices get too high, it can be a little bit tough to make those even block trades. And so then they're forced to trade odd blocks and it leads to some complications on the back end. And so stock splits make it easier on the institutional side for them to make transactions. And then also a forward stock split specifically adds a lot of liquidity into the market. And so because there's more shares out there, there's going to be a lot more transactions occurring. And what that does is that minimizes volatility or fluctuation in the price of a stock. And so it benefits a lot of parties all around. And Tesla and Apple both have had great run-ups over the past couple months. And so want to just make sure that they're taking advantage of that, bringing that price down as well to make it affordable for everyone.
Right. So just kind of
Hmm.
summarize, the share amount is changing, but the actual value of the company stays the same. It's simply more pieces of the same pie.
Exactly. So, I mean, just to put into numbers, if you owned 10 shares that were worth $1,000 each, right? If there was a forward stock split of 2 to 1, you would have double the amount of shares, but now they'd be half the price. And so you'd have 20 shares now worth $500.
Right. And we have a loyal viewer here, Andrew.
Yeah.
He just asked, so minimizes fluctuations. Will that be reflected in the beta?
Generally, it doesn't really have an effect on the beta. The beta is more how does it track compared to the market, but it does have an effect on, say, standard deviation, those kind of metrics instead.
Right. So most people, when they think about stock splits, they're thinking about forward stock splits and creating more shares of stock, but it goes both ways. Can you talk a little bit about the different kinds of splits?
Yeah, so the forward stock split is the more common of splits that people are aware of. The other one though that is out there is what's called a reverse stock split. And this is in the name, it's basically the opposite. It's the reverse. So instead of adding more shares and decreasing the share price, you are decreasing the amount of shares and bringing your share price up. And so what happens here, is companies, they want to pump up the price of their shares. And so they enact on a reverse stock split instead.
Right. And then Apple, since we've been talking about Apple, they're not new to stock splits. I think this is their fifth stock split.
Yeah.
And so we know a little bit about how these companies react after stock splits. So historically, do companies perform better or worse after stock splits?
Yeah, so historically there hasn't been much of an effect in relating to stock splits exactly on the value of the company or how the company performs afterwards. It really is kind of a wash, especially in the past decade or so. If you're buying a company solely because they're splitting their stocks, I would recommend not to do so. I would recommend, do your background research as well. Really, it's about the fundamentals of the company that's super important. Do they offer a good product? Are they in a position to capitalize on any changes in the economy and society, and are they in a great financial position to maintain it and do so? And so not really much of an effect from the stock split end specifically. Yeah.
Absolutely. So that's kind of the corporate side. So let's talk about the investor side and the benefits that an investor can receive from a forward or reverse stock split.
Yeah. So from the investor side, it's really more just about, whether you have more shares, which is always great. If say you've been looking to trim a position that has been doing well, but you don't want a larger chunk of your portfolio, so you don't want to lose that portion because of it. When you have more shares from a forward stock split, you're able to trim at a bit more precise level that you'd like. Reverse stock split, there isn't too much of a benefit for the investor. I mean, your share price is going to be inflated, and ideally it brings the price up a little bit. Investors see that and find it more attractive, but not too much of a benefit on the reverse stock split side.
Right.
Mm-hmm.
So Tesla and Apple, they announced that they were going to undergo stock splits, but when they announced it, it didn't go like poof and the stock split. So you have to figure out who is receiving additional shares, and then when they will, and a whole bunch of other factors. So let's kind of talk through when these things happen, and if do I have to own shares of a company by a certain date to participate then in the stock split?
Yes, you do. And so, obviously you have your announcement date where the company actually announces that they're going to be making that stock split. But the other important dates to keep in mind there is one, the record date. This is one of the most important dates that you want to keep track of. If you don't own the shares of if you don't own the company before the record date, before or on that date, then you won't be participating in that stock split. So you want to be owning the company before that record date. You want to keep that in mind if you're thinking about participating in a company to take advantage of that split. And then beyond that, you have your split pay date, which is basically the day that the company actually enacts on the split. So what happens is on that date, once the market closes, they split the shares or they condense the shares and change the price to relate to that. And then following day, the split X date, is when now it's going to be showing up on exchanges, on platforms, in your portfolio that you have more or less shares at those varying prices.
Great. And then if a company pays dividends, and dividends, just to give the definition, is a distribution of profits from a company to its shareholders. So if they're paying dividends and then that company goes through a stock split, then the dividends will have to change with the split.
Yeah. And so the dividends don't actually change with the split. It's just kind of the math behind it. It's very similar to how the price changes with the split. Basically, you're getting more shares, and each share is giving you a smaller amount of dividend, or the opposite. You're getting less shares, and it's giving you more dividend. To give you some math behind that, say you own 10 shares again at $1,000 a share, right? And you're getting a 2% dividend, right? So that's $200 out of 10,000. If you went over a 2-to-1 stock split again, so now you have 20 shares at $500 a share each. each share is going to give you $10 a share instead of $20 a share. I know it's a lot of numbers to throw at you, but basically keep in mind, you still own $10,000 worth of stock. You're still collecting $200 worth of dividends. Nothing changes on that end. Again, it's just kind of the back end math.
Thanks for clarifying that. And we have another question. So do you believe that stock splits will now be less common now that fractional share purchases exist? So this is actually really similar to a question that we were sent in ahead of time too. But do you want to answer this one?
Yeah, so kind of want to make a distinction between stock splits and fractional shares first and foremost. Fractional shares fractional shares is more offered through the brokerage end. And so to give some background on how, when you invest, the process behind that, when you trade on a platform, whether it be Charles Schwab, TD Ameritrade, Fidelity, Robinhood, whatever it may be, that's a brokerage that you're trading through. They are the ones that are actually doing all the dirty work on the back end to buy whatever investment that you would like to buy or sell, right? And so because of the recent technological advancements that we had over the past decade, now these brokerage firms have the capability to offer fractional shares, because what they can do is, if you can't afford a whole share of a company, then they pool your money with other people who are in a similar position as yourself, and they'll buy the whole shares themselves and then do the math on their end using this more advanced technology to then give you the proper investment back that you deserve. And so companies are never going to actually issue themselves fractional shares. They will always issue whole shares. And so when a stock split happens, how that affects fractional shares really depends on your broker's policy. Each brokerage treats it differently. Some of them will do the math on their end and either give you more or less shares based on the fraction that you own, or they'll simply just cash you out and then you can buy back in at this newer price that's adjusted. And so this is a question that you want to ask your broker on how they handle their fractional shares when it comes to stock splits.
Yes, and that jumped us right into the questions, because one of our questions was, what is the difference between fractional shares and stock splits? So thank you for covering that. And I think that we should just jump into questions that anybody who's watching has right now. And I see another one, and it's, with significant money printing, do you see buying bonds as a bad investment because of inevitable inflation?
Yeah, I mean, it's tough right now. There has been a lot of stimulus, there has been a lot of money printed, and the government has taken on a lot of debt, and especially with interest rates so low right now, bonds are a tough place to really find a lot of yield. And so we've been encouraging our clients, while we have been trying to play things a bit more conservatively, also the importance of staying invested in stocks. With rates so low, it just shows how important it is to get invested in these businesses, that are growing and have a product and have a service to offer, and have a piece of that pie and ownership in those growing companies as well, because that's how you're going to make sure that you get your money growing and stay ahead of any kind of inflationary rates.
All right. So I have two more questions that were sent in ahead of time. And one of them is, with a reverse stock split, what would happen if the shares I own only amounts to a portion of a share after the split? Say, for example, I own one share and they are reducing every 5 shares to 1. I would only own then 20% of a share. Yeah. So what would happen?
So this is for a reverse stock split. And so basically, say if you owned one share and they're taking 5 shares and turning it into 1, obviously you don't have those 5 shares to make 1 share. So what a lot of companies will do is they'll simply just cash you out. They'll sell you, they'll buy your share from you, give you the value of that share in cash. Then you can use that to invest elsewhere or pool with any additional funds to buy the newer condensed shares at a higher price. Perfect.
And then one more question is, are there any companies that you think could benefit from a stock split, other than, I guess, the obvious of Tesla and Apple happening recently?
Yeah, the first company that comes to mind is really Amazon. I think they're a great company, and they're just very tough to buy as an individual investor. If you want to buy a share of Amazon right now, it's priced around $3,300. That's That's not pocket change at all.
Expensive.
And yeah, very expensive. And so I think for Amazon's end, it would be great for them to have a stock split just so that they can allow individual investors to buy more into the company and participate as well.
Definitely. Well, I loved this How To with Ziad. This was one of my favorite topics. I think this is just exciting and new. And if you have any questions after we finish this live, please feel free to DM us or reach out to Ziad.
Yeah, reach out to me at Ziad Hijazi on Instagram. Find me on LinkedIn, or my email is ziad@gerberkawasaki.com. This is what we're here for as advisors. We want to help answer these questions for you. And, I know this is a very tricky time financially, and please contact us, book a consultation. We do offer the initial consultations for that at absolutely no cost. And so all it is an hour of your time, and we really love to help out and make sure that you're in the best position possible financially.
Yes, exactly. And then if you have any suggestions of what you would like us to talk about, we've said this before, and this live is really for you, for the viewers. So we want to explain financial topics that maybe you aren't as familiar with as you would like to be. So DM us any suggestions of future episodes, and we'll make sure to do them.
Yeah, most definitely.
All right. Well, thanks for joining me, Ziad.
Yeah, thank you, Mia. Thank you, everyone who joined. Have a great rest of your week.